Last year, Greece was given a third bailout rescue loan package from the other Eurozone countries and from the International Monetary Fund. But there's still a large overhang of debt from the previous bailouts. And that debt creates concerns about the sustainability and the burden of servicing it. So if you see on this chart, there is a huge spike of repayments due this year that Greece doesn't have the cash for. And then there's a lot of debt that has to be repaid in the decades to come. Not quite. Two decisions were made at this latest all-night meeting. One was to release about 10 billion euros for Greece's short-term repayment and expenses, which it doesn't have the cash to cover in 2016. But for the longer term, the IMF had demanded an upfront restructuring decision, because without a restructuring, as this chart illustrates, Greece's annual debt servicing costs would eventually shoot through the roof. Now, the other Eurozone countries didn't quite agree to the IMF's demands. No upfront full restructuring, but they did promise that they will take whatever restructuring measures are necessary to bring those annual servicing costs down eventually. First of all, Greece needs to show that it can keep the promises it has made in order to get these loans. Then the IMF needs to decide whether it wants to still be part of the program or pull out. And in order for it to want to stay in, the Eurozone countries have to convince it that they are serious and that they will take whatever restructuring measures are necessary to keep debt servicing costs reasonable. So there are some uncertainties, but we can say that the light at the end of the tunnel is brighter than it's been for quite some time.